Did you know that to truly understand the world's $150 trillion financial war, you only need to look at 3 invisible weapons? Welcome back. For the last decade, the mainstream media has fed you a very specific narrative. Crypto is a casino. It's for criminals. It's a bubble waiting to pop. They obsess over the price of Bitcoin going up and down to distract you from the real story. But here is the truth they are terrified to admit. We are not watching a market cycle. We are watching a war. A silent, invisible, high-stakes war between the most powerful weapon of the last century, the US dollar, and the first technology in history that threatens to make it obsolete. Most people think the government hates crypto because they want to protect you from scams. Incorrect. They hate it because they cannot control it. The US dollar gives America the power to sanction countries, freeze assets, and print value out of thin air. Crypto removes that power. It takes the print button away from the politicians. Today, we are stepping away from the charts. We are ignoring the memes. We are uncovering the 8 battlefields of the hidden war between the dollar and crypto and revealing who is actually winning. Disclaimer. If you can't ban the technology, you burn the bridges that lead to it. This is the US government's first secret weapon. In early 2023, something strange happened. 3 specific banks collapsed almost simultaneously: Silvergate Bank, Silicon Valley Bank, and Signature Bank. What did they have in common? They were the primary banks servicing the crypto industry. Insiders call this Operation Choke Point 2.0. Regulators didn't pass new laws to ban crypto because that would take too long. Instead, they quietly pressured the banking sector. The Federal Reserve and FDIC effectively told banks, if you touch crypto clients, we will make your life a living hell. The goal wasn't to make owning Bitcoin illegal. The goal was to make it unusable by cutting off the on-ramps and off-ramps to the US dollar. They tried to suffocate the industry by debanking it. For years, Larry Fink, CEO of BlackRock, the world's largest asset manager, called Bitcoin an index of money laundering. He hated it. He mocked it. Then, suddenly, in 2024, BlackRock launched a Bitcoin ETF and became the biggest buyer of Bitcoin in the world. Why the flip-flop? Did they suddenly fall in love with freedom? No. This is the Trojan horse strategy. The Wall Street maxim is, if you can't beat them, buy them. Here is the hidden danger that maxis fear. Wall Street is trying to financialize a decentralized asset. By holding the majority of Bitcoin in ETFs, institutions gain massive influence over the market price and potentially the network itself. They are turning Bitcoin from a currency of rebellion into just another asset class like gold or real estate, something they can control, tax, and manipulate within the dollar system. While the government attacks crypto, they are secretly building a clone of it. This is the central bank digital currency, CBDC, a digital dollar. They will sell this to you as convenience, faster payments, no fees, instant transfers. But here is the dark reality they don't tell you. Bitcoin is money without masters. A CBDC is money with surveillance. With a digital dollar, the Federal Reserve gains programmability. They can hypothetically set an expiration date on your money to force you to spend it, block you from buying certain items like carbon-heavy products or travel tickets if your social score is too low, freeze your wallet instantly without a court order. The war isn't digital versus paper. The war is state-controlled digital money, CBDC, versus free digital money, crypto. This is the most aggressive front of the war. The government is trying to establish a new legal precedent. Writing code can be a crime. Look at the case of Tornado Cash. This was a piece of software that allowed people to make their transactions private. The US government didn't just ban the website. They arrested the developer who wrote the code. Why? Because the US dollar relies on total visibility. They need to know who is sending money to whom to enforce sanctions. Privacy coins like Monero and privacy protocols are the biggest threat to the dollar because they create a truly dark economy that the IRS cannot see. The message is clear. You can have crypto, but only if we can watch every single penny you spend. This is the most ironic part of the war. Crypto was supposed to kill the dollar. But right now, crypto is actually saving the dollar. How? Through stablecoins like USDT, Tether, and USDC. These companies issue digital tokens backed by the US dollar. To do this, they have to buy US Treasury bonds. In fact, Tether now holds more US debt than entire countries like Germany or Australia. By demanding USDT for trading, the global crypto market is creating artificial demand for the US dollar. The US government is in a massive dilemma. They want to kill crypto, but if they kill stablecoins, they lose one of the biggest buyers of their debt at a time when nobody else wants to buy it. Since 1974, the US dollar's global dominance came from one rule: oil must be sold in dollars. That rule is breaking. The BRICS alliance, Brazil, Russia, China, South Africa, is actively building a blockchain-based payment system to bypass the US dollar. They saw what the US did to Russia freezing their assets overnight. Now, every nation knows if we use dollars, America owns us. Crypto, specifically neutral blockchains, offers a way for countries to trade oil, gold, and resources without touching the US banking system, SWIFT. If the petrodollar dies, the value of the dollar collapses at home, leading to hyperinflation. This is the macroeconomic driver of the war. When financial attacks failed, they turned to moral attacks. Suddenly, headlines appeared everywhere. Bitcoin boils the oceans. Crypto is destroying the planet. This is the ESG, environmental, social, and governance weapon. The government tried to pressure Bitcoin miners out of business by claiming they were environmentally dangerous. They proposed taxes of 30% on electricity used for mining. However, this backfired. Miners simply moved to places with wasted renewable energy like stranded hydro or flared gas. But the intent remains: use climate change as a mask to shut down the server rooms that power the rival currency. The final battlefield is inside the laws currently being written. Politicians are drafting bills to effectively ban self-custody. They want to make it illegal for you to hold your own private keys, hardware wallets. They want to force you to keep your crypto on a regulated exchange like Coinbase or Binance US, where they can seize it if necessary. If they pass these laws, crypto essentially becomes a standard bank account. The code remains, but the freedom dies. So who is winning this war? In the short term, the dollar is fighting back hard. Through aggressive regulation, Choke Point 2.0, and the institutional takeover by BlackRock, the US has successfully tamed the wild side of crypto. They have forced it into suits and ties. But in the long term, the dollar is fighting gravity. You cannot uninvent technology. People in Argentina, Turkey, and Nigeria are not using crypto to get rich. They are using it to survive because their own currencies have failed. The government can slow it down. They can regulate it. They can even co-opt it. But they can no longer stop the idea that money should belong to the people, not the state. The dollar isn't dead yet. But for the first time in 100 years, it is looking over its shoulder. Like, comment, and subscribe to stay ahead of the financial war.